Hello and good evening again to yet another Financial Literacy Thursday, where we gather to learn and educate ourselves and our community at large in terms of money, protecting whatever we are making. So we are told that the rich, it's not how much they get to be paid, but how much you're able to save and build on that wealth, not just for yourself, but for your family. So here tonight, we are going to be focusing on how we can get started young. How, if you're a parent, you can get your children started on these tools. If you're a young adult yourself, not to think that these things are for people that are starting to think about retirement and they don't apply to you. So that is a false narrative, and we're here tonight to learn together. And myself, my name is Dr. Sharon Wanyuze. I am accompanied by two wonderful panelists. I'm going to let each one introduce themselves and then we'll get started. I'll do ladies first. Happiness.
Thank you, Sharon, and thank you everybody who have joined the meeting. Well, my name is Happiness Uwitonze. I'm CEO at Growth Web Digital. It's an AI company, and also I am a financial professional. Thank you.
Thank you. Brendan, go ahead, please.
Hello, everybody. My name is Brandon Sibirumbi. I'm the founder of Dasper Family Office. We do an umbrella of services in wealth and real estate, and I'm happy to be here.
Thank you. So, as you see, we're joined by people that can be considered young adults. And as a reminder, when we say the term young, we mean anyone from 16 all the way through 35. And obviously, our people outside that range, you know, we are fortunate to have these tools available to us now. So you're the youngest you'll ever be today. So the sooner we learn and we take action, the better our outcomes can be. Uh, I do want to take a leaf from our panelists and say what I also do. I'm an instructor, I'm an educator, and it's always exciting to learn together. Learning is a lifelong journey. You're never too, you're never too much of a master to keep learning, especially different fields. You may be an expert in just one small field, but the wider we expand our knowledge scope, the better. Okay. So we're now going to get into this conversation. So we who are fortunate to be here, alive, healthy, and have an ability to come together and learn, I'm hoping that tonight's conversation will be a semi-informal conversation. It's a conversation, not a lecture. So we are here to discuss. We have, panelists who guide the conversation. But I'm going to ask you all that are here tonight in this Zoom to be able to share your thoughts and questions and comments in the chat, and then we'll address them towards the end of our conversation. So the panelists are just to get everyone warmed up as we learn together. Okay, so as we open our conversation now, I'll start with you, Happiness. Why is it critical to start financial education at a young age today in 2026 more than ever?
Thank you so much, Jen, for such a wonderful question. So it's very important or critical for young people to start or have financial education right now more than ever because one, time. So time is very important and it's something that we always think we have, but unfortunately we don't. So it's very critical because when you're younger, you have enough time. You can save up your money or well, even your health, you're in a good condition. So you have time to work, you can save. So I think time is critical, and that's why financial education is important. And also, when you're younger, you you're able to make you're not rushing. So basically, you're not rushing with time, and obviously with other things that come with getting older, like family and stuff like that. So having financial education at a younger age is better because you can now make decisions before, or you can make decisions before you get older and you have all these things that are coming at you.
Hmm. Thank you. That is definitely wise. Today is like we started out with, we're the youngest we are today. So this kind of education is not just for middle-aged people with families who are more worried about, what would happen if they left, but it's also just as important for young people. As long as somebody has started making an income, and we know that in this country, high schoolers can start working. So just protecting the little they have, and like you said, very well, happiness. As they are young and they're educated, they're probably the healthiest they will be. So also studying young, as you're energetic and you can work hard and protect hopefully what you're making. So now coming to you, Brandon, what are the biggest money mistakes young people make early, and how can they avoid them?
Sharon, thank you so much for the question. I actually should say thank everybody who's on at this time and sharing their time with us. Um, the biggest money mistakes, I would say, you have to start from somewhere. So I would say the lack of financial education. And many people may have a lack of basic understanding of how money works. And so in a person's mind, they may think, I have this idea that I'm trying to achieve. And without the lack of knowledge of how to, save money, invest money, or not fall into the trap of increasing your living expenses as your wage increases, they they lack the uh, direction or the tools to get to their destination. And so it starts with education, I would say. And happiness, I think you were touching on something where financial education at a young age goes a long way. So if money is a tool, I'm gonna put an analogy out there. If money is a car, uh, you know, you have to know how to drive the car. You have to know how to utilize the tools of money to get you from point A to point B. And if someone is, if how someone earns income is solely based off of their employment, their skills, then essentially we are the car, and the human body has a limited, um, it has its limits. There's only so much time we could work, to earn money. And so we have to think in uh, lots of, where else, what other vehicles can I make, like investments that I could improve, allow the money to keep going further than me myself can go alone. So simply education, lifestyle inflation, and not falling into that trap. People can't just rely on their own income. The question is, if they stop making if the income stops coming in, what is the plan from there? So I'll just leave it at that.
That is really good. Education and information is power. especially if we actually act on it, like you said. And I think you could not have said it any better. Understanding that just because our income may increase doesn't mean automatically go and change out your whole wardrobe and get a new car. And I think that social media for sure plays a big role in this. We want to impress people that don't even care about, don't even care. So this is a big deal. I think even more so for younger people who spend hours per day and per week on social media, that even as we are looking at these things, nobody posts that they lost something. Everybody's posting great things. So there's an illusion that everybody's life is getting better and like more expensive, but that's not the case. So, cut your coat according to your clothes. Like try to live below your means. I like that. Okay, so now maybe pivoting a little bit to a different thought here. Let's talk about income and protection. For our people who are making money, I'll come to you, Happiness. How can someone with a modest income still protect their financial future effectively?
One, we obviously all love making more money, but if you're not making a lot of money or like you said, a modest income, you can still protect your future. You can still make decisions that can help you grow your money or even protect your future, right? So you actually don't need a high income. You just need to have discipline and be consistent. There's lots of things that you could do. For example, you can like Brandon said and you Sharon, avoiding expensive lifestyles, living honestly below your means, even though sometimes it's hard, but like obviously for young people. But so that's number one. Number two, setting a clear budget. You know, this this money is doing this and this. And one thing that I read a book of this Nigerian woman. I think, I'm not sure the title of the book, but she was talking about how, you can, even if you have low income, because she was a teacher. I think she had just been scammed by somebody. They took all her money, and then she was just giving a strategy on how to save your money, even though you're making less. So she mentioned how to, obviously plan out your budget and have at least an account that does something. Let's say you have a checking account that's paying your rent or bills, and then you have another a savings account, and then you have like a emergency fund account. So basically, making sure that every account, every income that you have is accounted for. And of course, making sure that you pay yourself, because having like a miscellaneous um amount of money, because if you don't do that, sometimes we find ourselves, because obviously we have needs, but if you don't account for those needs, then you find yourself overspending. Another thing I could say is life insurance, because if you're getting life insurance, number one, you're saving, and number two, you're investing as well, because that premium that you're paying, and of course, I want to say this, you can start as little as you can. You don't have to start with the $1,000 premium. You can start as little as you can, and then you're locked in because you're young, right? So obviously, getting a life insurance, because it grows and also protects you, and you have the opportunity to save. So even though you have a modest income, it doesn't mean you can't do these things for a financial stable future. Thank you.
Thank you, Happiness. I like how you shared with us ideas that it's not about how much you're making, but what you can do with that. And maybe coming then to you, Brandon. Many people, focus on making money. How can I make more money, more money? But there's less conversations about protecting it. So why is income protection actually a very key step, the first step in financial planning?
Protection is important because, having income, period, is your lifeline. It's the foundation to everything. And you know, a side note, every day I'm, in real estate and looking at investments, and they say cash flow is king. It's like it's a saying. But I'm relating to that is the investment is as valuable as the cash flow that it's creating. So when you talk about a person's life, then if they don't have investments and their primary job is the largest income coming into their life, it is the greatest asset that they have. It's greater than the car or home because you are producing, you know, your everything that is life sustainable, your living expenses. So what I'll say basically is, without the job, you can't pay the mortgage payments. There is no savings, there is no investment. So you have to protect your income. And people, I think it's whatever the case may be, people are willing to pay for insurance on their car, you know, insurance on their home. So if their car breaks down, they have insurance to cover something back to be able to drive again. If something happens to their home, they have insurance for the shelter again. But people don't have insurance on if they lose their income, whether it's a illness or injury. And that's where all the biggest problems occur. So that's why I would say it's really important just considering uh, life insurance, especially for income protection.
Mm, thank you. I think sometimes it's not because people don't want to do it, sometimes they just don't know. So I like that example that you just gave regarding how we protect many things. Even when we go to buy a new phone, they're always asking like, you want to add insurance? And many people do. So I like how you said nicely, without your income, none of those things would continue anyway. So it makes sense to definitely protect the origin or the starting point. Thank you for
Yeah.
that. Um, and maybe if we continue with our conversation, and audience, start warming up, please. I'm about to pause here and give you some time. But we just talked about income protection. Then how can we now focus on growth though? And what actual financial strategies can we take? So happiness, let's come to you. What are some simple ways, right, that young people, anybody can use today to start growing their money?
Um, Honestly, the first strategy as a young person that you should be doing is getting life insurance because number one, you're young, you're healthy, and you have an opportunity to get um, accepted or to you have an opportunity to get your insurance because as you get older you get sick and then maybe sometimes you're denied, right? So number one strategy, if we're being serious and honest, is getting a life insurance because number one, you're locked in. Whatever premium you're paying today, that's what you're going to pay. um, Again, you're healthy, you're not sick, so you have better chances of getting approved. Also, another strategy that I can obviously mention after life insurance would be avoiding unnecessary debts. There is no reason to be buying things that, one, you cannot afford. Number two, avoiding expensive lifestyle. Like we've mentioned before, there's no reason to be living up above your means. And also, even if you have money, it's not wise to waste it. It's not wise to be having things that you don't need necessarily. And also prevent using your money in a disorganized way. So making sure your income or the money that you're getting, it's allocated well. And also, like I mentioned before, having some sort of like miscellaneous, that way you're not overspending because you're disorganized. Uh, Also, one thing that I could mention is so when you get life insurance, one thing that personally that I've loved, or a strategy that I've enjoyed with life insurance, is the ability to invest. So as a young person, most of us, well, I would say for example, me, I don't have a lot of knowledge when it comes to investing. Like I hear people are investing in markets, they're investing in this and that. So, but I don't really have the information. But to have a tool like life insurance where you can actually invest in these stocks, it's to me it's great because now I don't have to go running and finding where to invest my money. And also the caveat is when you invest your money in these stocks, it means you won't lose your money when the markets are down. So this is something that I think it's very, very important when it comes to young people. And it's a great tool. If you have insurance, this is a very great tool to help you grow financially and eventually become financially stable as a young adult.
Mm. Thank you, Happiness. I think you're mentioning that too. We're going to have some time maybe to dive deeper for anybody in the audience who is not familiar with that kind of life insurance that does have a saving portion. But maybe to give a preview here, that combining what Brandon said and what you just said, life insurance is the type of insurance that protects you, the income earner. So before we go to purchase and continue paying for all the other insurances we actually have to, like a car and your rent or mortgage or home or even phone, think about protecting yourself and your income, because you're the one who makes the money in the first place. Now, life insurance is not only to protect you when you get an illness or when you, God forbid, pass. It can also be an investment tool, like Happiness said, where your monthly payment or premium, have part of it goes towards that protection of your life, and part of it goes into, they invest for you. But you can also help select what stocks you want with the guidance of a professional. So when you came, you saw a flyer that has contacts, and we're going to show the contacts again at the end. You're welcome to come for a free consultation to learn about from a professional to guide you into understanding what tool would be appropriate for you, depending on where you are in your life journey and goals. Now, Brandon, we know that everyone would like to build wealth, right? Everyone would like to be financially stable. But what are the habits that actually separate those who build wealth from those who are stuck paycheck to paycheck?
I think the best wealth building habits or blocks, it may sound cheesy, but it starts with your mind, having intentionality. What is your intention for every dollar? Every dollar has a specific plan, purpose, and destination. And you got to think not just one action, but stringing together consistent actions over a long period of time. So, day to day, we have many decisions. We can feel hungry. You can feel like, oh, we need to go out. But uh, just a simple premise, future plans over impulse decisions, and have to do that over and over again. And it's really not to get too deep, but like it's the time value of money and an investment, which compounds, uh, that makes the biggest difference. And going back to a foundation is going back to starting with education. So many people could feel like, oh, I need to learn about stocks. I need to learn about real estate. And there's actually a lot of free information out there. So that's one thing. But to speed up the process, you go to, groups like this. This is a good group to learn information from those who are a step ahead of you, a few steps ahead of you. You engage, you ask questions, and primarily a really quick way to quicken the learning curve is to find a professional and ask them all the questions you have because you need these tools, to navigate your future and you need to feel comfortable uh, making these decisions because a confused mind does not make any decisions. So just to, I'm gonna bring it back. Starts with the mind, you get your education, you set your destination, and then you do a repeated process every single day, and you can build wealth. Uh, Last thing I'll just mention is building wealth is uh, the idea of investing in wealth building always comes with a sense of risk, which is, the opportunity of loss, essentially. And to build wealth, you have to protect yourself against great loss. And that is the other side of the story is where am I exposed the most? If it's talking about real estate, you would ask, how could we, lose money on this deal? But if it's talking about your income, it's, you know, if I lose my job or if I get sick, I need to look at this picture and figure out how am I going to navigate this. What I'm landing the plane here, uh, knowing where you're most vulnerable and trying to cover that is one of the biggest building blocks in building your wealth. So, if it's insurance on your income or, the hospital and medical bills, uh, it's very important.
Mhm. Thank you, Brandon. I think you definitely tied all that together. So your mind specifically, knowing that it's possible, right? That you can actually be financially stable despite one's background. Because sometimes a person may grow up in a family where struggle is the norm. But I know personally it has helped me to just expose myself. Even, I mean, social media is not all bad. We can use social media to follow people that inspire us. In terms of education too, like they share tips, they share perspectives, they share encouragement that we can see ourselves in a position that we right now are only dreaming of. So it's possible for sure. And it all starts with educating oneself, and we're here doing that right now. So everyone kept, you both kept touching on that aspect of life insurance. So let's dive deeper into that as we kind of draw to a close here. Happiness, back to you. At what stage should someone consider starting this, for example, life insurance policy, specifically the one that you talked about that involves investing, which you call the Index Universal Life Policy? And why does studying early really matter? So you did touch on it that studying early you have a lower premium, but how early is early?
Thank you so much, Sharon. This is an exciting question because I have a 14-month-old daughter, and I think starting early as soon as that, even, I mean, as soon as they have a social security, to be honest, you need to start thinking about that IUL policy. And the reason why it matters earlier is because number one, you have the ability to pay a lower premium. So and then you're locked in, right? We kept saying locking in, which it means you pay this amount and consistently this is what you're paying, right? Then than committing when you're older and then you're paying more money. Um, Point number two, um, there's flexibility, right? Um, because you're not rushing with time, there's not a lot of things on your plate, such as family, such as life events. So there's flexibility on, with this policy. And also, another thing I would say, when it comes to young people, we're healthy, we're not sick, we don't have life-threatening illnesses, we don't have lots of things on our plate. So it's easier for us to make these decisions that can help us financially. So I think start as soon as you can, and also make sure when you're starting, you're making these decisions that can help you grow your wealth. Thank you.
Thank you, Happiness. So maybe then coming to you, Brandon, just to elaborate more on that. Most people tend to think that life insurance is only for older people or for death. In case of death, leaving some sort of comfort level for your loved ones, especially as they go through that tough time of organizing for burial and just life after the main breadwinner passes. But how does it actually provide other benefits to people that are still living, to the owner of that policy while they are still living? How can, especially as we talk about young people, we know that none of us knows how long our life will be. Some people, unfortunately, we know kids that die. We know young adults that die. So death can attack anybody. So that is still a relevant thing to consider. However, there has to be more, right? There has to be more for us to benefit out of something that we're paying monthly for, other than that. So Brandon, can you talk briefly about that? What are some other living benefits and income growth avenues that such a tool can provide to anyone?
Thinking about your question, let's go off top of my brain a little. Basically, if you want to speak, oh, you can access the policy's cash value. Uh, Other benefits of, if it's insurance, it's of course sizing what's best for your situation. If you want to talk about IULs, it's a little bit more of a Swiss Army knife, and to understand the benefits of an IUL, what it can do is it has a cash value. The policy has a cash value that it can build up, and also you could pull from your cash value to, do investments, to do other things, and essentially you can pay yourself back, which is tax free. And talking about tax advantages, um, the cash value growth is first tax advantage. Um, the loan from the cash value is tax advantage. And when we do pass, essentially, it's a tax-free uh benefit to the beneficiaries of the life policy. So it's something that if people are, investment oriented and they want to, maximize on the percentages, it's definitely, as it's been referred to, like a, tax-free bank account. But just sharing one side of that story. The other great part is it has protection on the downside of its growth. So the cash value is basically protected against market losses. There's a floor, so if the the stock account that is um the life insurance is in, if the stock market drops and it's a negative year, uh we don't have negative years. We may, not have any growth, but we don't lose the principal that is locked in. Um which is a plus, it's another addition. The other thing is there's a little bit flexibility in adjusting payments. There's uncapped contributions, unlike a 401k or IRA. And Sharon, if I'm missing anything, I'm really going off the top of my head here, but I'll just say a few things. Every There's pros and cons to everything, so hopefully I'm sharing something that gives you more insight, if you're comparing IUL versus a 401k IRA, because a 401k is more fully exposed to like market risk. Um, we essentially have unlimited, IUL has more unlimited contributions versus the capped annual contributions of a 401k IRA. And yeah, there's taxes, if you want to pull out early, there's a penalty. There's required distributions at a certain age with the IRAs. So, the tool gets better the more you know how to use it. And again, it can be a longer conversation, which Happiness and Sharon and myself are willing to speak with you offline. But that's what I would share with our group today.
Thank you, Brandon. I think that definitely including some technical information that is very good. And I just want to add that for everyone that is here today, if this was your first time, we do host such conversations every week. So if you would like to understand what Brandon was just talking about in more depth, like how does this compare to IRA? What does it mean to have a floor rate? What does it mean tax advantage? All those terms that could take a whole conversation just to talk about. But to summarize in very simple terms, it's an index universal life insurance policy not only protects you, but it can also be a wealth building tool because part of your money that you give every month goes into investments which are going to grow with time. And we know that with the ever increasing inflation, like $1,000 today is going to be much less in 20 years, 30 years. So if you even want to think about protecting yourself later, that's money that if you want, you can take out. However, it's always better to keep it in because the more is in there, the more it multiplies, obviously. So in conclusion now, what are some practical steps that people here can take in addition to what we've all been talking about, right? If somebody just heard some of these things today and they're starting from zero, Brandon, let me come back to you. If they're starting from zero, what are some baby steps that they can take today in order to start heading towards the right direction?
Baby steps. So just to be, sit down, be self-aware of your situation. If you need to write stuff down, write everything down in a way of, budget. You can map out your income, your expenses, um, where you feel vulnerable at, like I mentioned earlier, and your goals, what you would like to obtain in a financial sense or what you need to protect. It could be, your house, uh, your future income for your family, just having awareness, aka budgeting. And again, uh, other financial professionals, there's a needs analysis we could help you with. And conversations are free. So that's one thing. And when you have everything written down, then you can have a sense of direction, such as, if you need a policy, you can understand what size, what is the purpose of this policy. And that gives you something that's more secure and grounded. And again, moving in direction, it's what's sustainable, what is consistent, what are the habits, Hopefully it's also saying don't put yourself in a situation where, I kind of think about, you're driving home and you see like the fast food place, like, oh, I'm I'm starving. I am so tempted to do this, but you have to put in your own guardrails to help you get from point A to point B. And if you have a big enough why, thinking about your future, your loved ones, you're gonna get there. You're gonna get there. It's better. Don't feel like you have to do it as an individual. Put in professionals as your team that essentially work for you or on your behalf to reach your goals. And yeah, it's the main message I would preach. Everyone should think about who can I define my family purpose, my family values, our retention, and then let's put professionals to support that. So that is a foundation I would say to start from.
Thank you. And then, Happiness, what are your last thoughts here? If someone young is listening to this conversation or will listen later to the recording, how can they stay consistent with that saving that Brandon was just talking about? How can they stay consistent with the saving and investing, even with limited income? So we know generally most people, as they are starting out young and growing in their career, their lowest pay is probably going to be the youngest they will be, when they're starting out. So how we've mentioned so well in the conversation that it doesn't matter how little the starting income is, it's how well we can save it and invest it. So just talk to us a little bit, Happiness, about staying consistent.
Thanks, Sharon. I like what Brendan said, big enough why. So you have to focus on your long-term goals. You have to know exactly where you want to be financially. If you want to retire nowadays people retire at 30. So you have to have that goal set and you have to be focused on that. And staying consistent means joining groups like this, like Brandon mentioned, or surrounding yourself with professionals or people with the same mindset as you. People who have the same goal, people who understand money and how important it is to financially be stable. Because obviously, if you surround yourself with people wasting money, then you're shifting from your goal. You're not. Then now you're big. You don't have a big enough. Your big enough reason. It's now diluted, right? So you need to surround yourself with people that have the same mindset as you. Also, set up a financial plan. Every time you get paid at work, make sure you have a plan or a budget. You know where your money is going, and also treat your life insurance as non-negotiable expense. This has to be paid no matter what, you know? And also remember that it's progress. You know, it's one step at a time. It's not perfection, it's just consistent and progress. So I would tell someone who is listening to us here, number one, you don't have to be perfect. Obviously, when a baby grows, they start from milk. They don't eat solid food right away. They start, they drink milk. So same thing as money. Start little as you can, like we mentioned before. You don't have to have a lot of money. Obviously, when you're starting out in your career, you're not making a lot of money. That should not stop you from getting life insurance or from making better financial decisions. So from the income that you have, you can start making better financial decisions that could help you in the future. So if someone is here listening, you don't have to make $1 million to right now to financially plan for your future. So just stay consistent and surround yourself with people with the same mentality. And also, uh, it's not about being perfect. Yeah. Thank you.
Thank you. And then, so back to you all, our wonderful audience. Please, I think we prepared you in advance. This is your time. If you'd like to unmute, give a comment or a question, we would be happy to hear from you.
Thank you so much, our young generation. Bravo. You took us to another step that one could not imagine. Thank you so much for educating us, and to show that it's not about age. You know, the younger you start, the better off you are. And so for us to know that we are leaving a path to people who are conscious about money, who are educated and who are educating us on what we must have missed. This for us, it's a proud moment. It's really a proud moment. No, three young generation here, three youth who've shown that where we saw it growing. So really, and just a really quick comment to add to what you all have shared is that I have learned one thing exploring this wealth management, and the wealthy have a saying, or one thing that they always say, own nothing but control everything. And so most of us here, when you think about wealth, when you think about money and so forth, there is something that we never think of. Just sharing there's something that we never think of until something happens. And so the wealthy they have a tool that only few of us really probably know, or not all of us know about it. And it's a tool called trust. And so, and in that saying that I heard a gentleman saying on social media that when you get insurance for your family and so forth, when you get insurance for family or kid, one of the biggest mistakes you can do is just put your kids on as beneficiary. And I was wondering why exactly he said that. But I said that sometimes this policy could be exposed to people who needs harm or who want something else. But the best thing he said was that if you make a trust and you put the trust as the beneficiary, but you put your kids as the beneficiary of the trust, which means no one will ever find out about what you have. So basically putting everything in the trust and having the beneficiary, you control everything, but you own nothing, which means the path that we're going, it's great, but there's also a path that we should be also, we should be protecting ourselves. This is where you build wealth, but you can lose it as well on simple mistakes. So for those who like to read, there's a book on Amazon called The Only Living Trust Book You Ever Need. It's a simple read. I'm trying to get myself, but I've only read a few pages. It's a book that teaches you that teaches us how to secure our wealth, no matter how little, to the public. So it's hidden, but it's hidden also. It grows tax with anybody else knowing but us. So it's just another way to reinforce your topic here, which actually I'm so glad that I tuned in today. It was amazing. So bravo to you all.
Thank you so much,
Thank
Mr.
you.
Sam. It's very encouraging to hear, that this was productive, and thank you for that added comment. Yes, Ms. McKitt.
Great discussion, guys. I can't say better than that as well. Like you all said, really, wealth is not just built by chance, It is always built by clarity, discipline, and consistency. You all said that many times. At times, people think, oh, someone has more money because they earn more money. It's never like that. It's that discipline, making sure that if I'm making $2,000 a month, at least I can save 200. But if you can't save anything, you never ever have to grow anything because you have nothing in your stores. So this conversation was timely, mostly coming from young people, right? Young people who feel like maybe, oh, I still have enough time ahead to save and to make more money. But this is a very strong reminder that financial success starts with that knowledge. You being here, you taking actually being in the driver's seat and teaching us that the older people that, oh, maybe you forgot, but we are here. We are not going to waste time. We are starting right here. We are teaching even the young generation. So kudos to you all. Great job. Well done tonight.
Thank you so much. I think
You
we
mentioned-
definitely have great role models in our community like yourself that
And let me
spearhead
also
this
just
education. Go ahead, Brandon.
interrupt Sharon. I just want to say, such as yourself. So, that's all I wanted to say.
Yeah, I agree.
Hi, hello.
Hello.
My name
Welcome.
is Shazia. I also thank you for educating us today. I have a question. You see, you talked about people with modest income, how they can be able to afford insurances, and but there are people who are new in this country. Like when they got here, they wasn't like lucky to be provided with financial information of how things work in this country. And now they find themselves in a lot of debt, modest income, they have family to provide for. Like, what's your advice for those kind of people? Thank you.
Thank you so much, Shazia, for that wonderful question. Brandon, you want to tackle that?
What I will mention to you is I don't want you to feel like you're alone. I don't want you to feel like you're the only person that is going through a situation. Throughout our community, there's many people over the decades who we have similar stories. And like Sharon has mentioned of social media, we may share our highlights, but we may keep the struggles close to our chest. And naturally, that's human. It's natural for us as humans to do that. But I would just share with you to reach out to professionals, reach out to people who, if it's their niche of, I'm gonna list off several things like credit repair, if it's a niche of debt reconciliation, if it's the insurance to investment to each part please, having multiple conversations because it sometimes it takes multiple steps to get yourself to a place you feel more secure. And that's completely fine. Like, doesn't matter if it's been a year or it's been, 2 generations. It's the idea that, hey, there's people that I can come to, I could talk with, they are professionally qualified, and no problem is unsolvable. I don't need to feel that weight of, oh, it's a struggle, which we feel it when we're isolated, but uh when we're talking, there's one, the comfort of like, oh, I see the light at the tunnel. And two, when you're taking action, it gets you out of the state of the heaviness of it. So I share that with you, and you could always reach out and we can speak publicly, and I'll help you any way I can. Not even not it's not me soliciting you. I'll share with you who I know and the contacts.
And I think earlier Happiness said it very well that ultimately you can start as small as possible. At least just for the protection of that family, because and also for the little that has been made already. So Brandon said it well that if you would like or know that person, that you would want to connect them with any of the financial professionals here, they can definitely see the needs of the household and the income coming in and propose something that is very comfortable. Ultimately, an action is what is needed to protect even that. But you said it very well, Shazi, as you're studying, that some lack of knowledge puts us in a hole that can be difficult to get out of. But it's never late. The sooner we learn where to get the rope to get out of that hole, the better. And it's all about baby steps for sure.
Hello, this
Yes,
is Roy.
Go ahead, please.
Yes. Well, kudos to you all. Thank you for the wide wealth of knowledge and information that you have shared with us today. And yes, starting early does build muscle memory, which is to teach a child the difference between the need and the want. And Brandon did allude to the fact that financial discipline is very important. You pass by, when you have kids and you're passing by a McDonald's, they can be shouting, McDonald's, McDonald's. So it's starting early to teach them how important it is when you really need it and you want it. Is one of the financial disciplines that we kind of build on from this part of the information. There was I think it was Happiness who talked about how early it is to start building something for your child. My question would be, how early can it be? And which are some of the tools that you have to build to compound an investment for a young child? And then we also learned about the power of compounding. In my world, getting into the financial industry, the rule of 72 is what came into memory here, where we were taught how money works, the frequency in which money compounds faster when you start early. So this was a very good learning experience and also to teach us how to be able to tap into the resources. I heard about importance of building credit. Building credit is something that many people come into this world, into the country, and they mess it up. So that will also be something that is important to bring to the forefront, so as to get onto the path of all the good things that we have. We talked about the IULs, we talked about the IRAs, and we also have the annuities and various mutual funds that we work with in this group. And this is all knowledge that we bring to you. We invite all of you to please join in on this journey, and we are willing to share that information. Back to you, Sharon.
Thank you so much. Happiness, I'll let you comment on what Mr. Roy asked.
Yes, so you can start as early as possible. Like I mentioned, I have a 14-year-old daughter, and if you as soon as they get their Social Security, you can be able to get them a financial tool that can help them as they grow. And in this IUL tool, well, you can do investing for them. They can be able to pay for college using that same tool. They can be able to start a business once they're done with college using the same tool. There's lots of different things that they could use. They can be able to do using the same tool. So starting them very young, as soon as you can, because number one, you're locking. We keep saying locking in, so you're paying a relatively small premium than when they're older, and then you also have enough time to build that wealth. So you have enough time to build on that wealth, so that way your child has enough wiggle room, or I would say money, for their future. Yeah.
Mm-hmm. Thank you, Happiness. And just to add on to that part for locking in, again, for somebody who is not familiar with that term, that means if a young person starts, they're young, they're paying $50 a month for, a protection that is, say, worth 100, 200,000, even though they are much older, say plus 20, plus 30 years, they can still be paying that $50 premium. However, if they start when they're much older, the monthly payment goes higher with age, because you're more of a liability to the insurance company, because you're more likely to get sick than, somebody that is younger, or even, getting closer to the end of our time here. Any other thoughts or comments as we kind of draw to a close here? Yes.
So thank you again, guys, for great answers here. I just wanted to go back a little bit on Shazia's question for new people in this country and people who are still struggling. That is why actually this group is here. Every Thursday, same time, we are here learning about different kinds of those financial literacy and money matters. We all came from those kind of startups. When someone is new here, not just being new, let me say you have a young family, a husband and a wife are now both able to go to work because they have young children. Of course, it is hard, but that is why when we see these guys here speaking here, they are all financial professionals. At the same time, they have other jobs. Open up another kind of income stream. Maybe actually get a license as well and do this part-time as you take care of it. I tend to tell mostly young moms or even moms, when if you have older children, teenagers, you can never find a better job, an easier job, a job that gives you more control, like actually being able to work for yourself. Because when we have, I had children in this country, mine are older now, but when they were still young, you have to pay a lot of money to put them in the daycares. Sometimes you find that it's even more expensive than what you're making. So what do? You have to make sure that you're finding those other sources of income or other ways you're able to balance that life, the money coming in, your family and yourself. You have to be able to know how to control actually your life, not just the money you bring in, but how are you going to manage to be able to have a balance as a young mother, as someone with children and you're not able to go to work. What can you do? We are here to mentor you. All these young people here, they are all professionals, as you can see on the flyer, but they are doing this on site. They always say, really, there is never small money. You can make extra $1,000 a month. That $1,000 a month can change your zip code, can actually help you get another car, because you can get a car note for $500 when you earned $1,000 or $2,000 by actually bringing in a license. So yeah, let us try to be more intentional, like these young guys already discussed. Come to this kind of trainings. These are free. In this country, really, you cannot find this kind of information for free. But we are here. People are here to share, because to get here, we are fortunate enough to have other people who shared with us. So come, all of us, let us learn together. Let us share. Bring something you want to learn. If it's budgeting, we have financial professionals who knows how to budget. If it's looking for a job, people are here to help. So let us work together, and we'll really make it all together as a team and as a community. Thanks again, guys.
Thank you so much. So we kept talking about contact. So I just want to share a slide here. Other than what you saw on the flyer that you joined with, I do just want to refresh our minds regarding our call to action, in addition to all the nice things that were talked about, and then a way that you can communicate with like some of the financial professionals here. So again, we learned tonight that ultimately we have to empower ourselves, and it starts by learning. And then you start taking action, like saving and probably building an investment portfolio, and ultimately teaching others so that we can all grow and together rise as a more financially free community. If you'd like to learn about some of the things that we talked about tonight, please contact us for a free consultation. These are a couple of emails in addition to the phone numbers and contacts that were on the flyer. So with this, I will conclude maybe this conversation and invite you again to use the same Zoom link that you joined with tonight, same time, Thursday, with the same link. So you're very welcome to come again, and I hope that you gained some insights tonight. And I do want to thank again our panelists, Happiness and Brandon, for a nice conversation tonight. Thank you.